Central, 3 p.m. So I think with all these years we're on YouTube channel, 3 p.m. in the afternoon, we probably changed our nap habit where we normally take a nap at 3 p.m. Now we always are awake because we have these webinars going on. We always bring you new information. This is our website, folks, communitycpa.com. You can track us down with this website, and you know these buttons on the top, and you see there is onboarding with us. If you click that button, which I'm not clicking, if you do, and you can sign up with us, even if you don't need to talk to anybody. You can start uploading your files and start sending us message and have your own portal, temporary portal in our system so we know you are coming on. And then of course it's our famous appointment button. I'll tell you why I say it's famous, because I get appointment on my calendar all the time. I would not say, couple of a day, but one a day, not not overstating. That's how popular this one is, and you can meet us there. Of course, invoicing, that is how we survive, and we appreciate all of our clients who supporting us, and I truly do. I don't take that for granted. Obviously, everyone has a reason to go to some CPA firm to do something, but you come to Community CPA, that probably says you trust us and we work really hard for you, so we appreciate that. We don't take it for granted. Here is our YouTube channel. I would like to mention this to you just in case you have not subscribed to our channel. If you go to YouTube, you type Community CPA, you'll see a whole bunch of us there. If you subscribe, then every time we come online, whatever topic we talk about, you will see it. Then you can choose to come online or watch it later, because later on we deposit them into here. Now, let us go ahead with today's topic, meals and entertainment. It is an old topic, but it's always getting people so confused because there's so much changes from 2018 to 2020, then now back on to 2024. So are we deducting? No deducting? 50%? 100%? There's just so many things out there. So today, I'm going to provide you with a clear thinking for 2024. See, I put the 2024 on the title just because, the meals and entertainment deduction is not the same during the pandemic time. So let's take a look at that. About our firm, and you know about us, right? We are in business for 27 years, and we have more than 12,000 clients, and we have 5 branches going on, and the newest one is Houston, Texas. So we welcome you to refer Houston clients to us because we are not there yet. We started for the branch, but we still are in the stage where we want new clients. And I served on the National Taxpayer Advocacy Panel. This panel is an advisory body to IRS, so for 3 years. This is my 2 books. You know my 2 books, right? Folks who see this, that is the picture of me, the better me. You have picture which reflect the worst of you, and or the true you. Then you have the one that just flattering you and to the extreme. These 2 pictures are exactly like that. I love it. When I see those pictures, I say, oh, I love myself. But when I look at the mirror, sometimes I'm like, no, I don't like myself. So, but to impress you, to have a nice picture on the book, so you're attracted to looking into, what is this lady doing? And hopefully you gain a good impression about me. And obviously, Community CPA, this firm, is something I brought up from 1998. So I am pretty proud of folks who are in the firm, and I want you to be impressed with me. And then you get an opportunity to see our folks, then you'll be impressed with every one of them, 40 of us. All right, no responsibility disclaimer, general guidance around deduction. Of course, in business you make money, and in business you spend money. I always say that people who knows how to spend money and also know how to make money. That is so true. You have this, kind of mentality. My parents' generation, they make money, they save. They make money, they save, and they don't know how to spend money. Business owners, by bigger percentage, knows how to spend money. But the IRS come up with guidelines. They're saying that, oh, business, we know you guys just good at spending money, but we want to put some parameters around you so you don't spend, and you can't deduct if you spend too much or you spend not right. So business expenses are the costs carry on a trade or business, right? You have to have a purpose for business, then you have expenses that occurred, then you can deduct. These expenses are usually deducted out of your profit, out of your income, sales, then netted into a profit or a loss, right? To be deductible, IRS said a business expense must be both ordinary and necessary. That's a great guideline, isn't it? Ordinary and necessary. It's almost like a word salad, but it means a lot of things. At the same time, it doesn't mean anything. So there's a lot of court cases out there, and your taxpayers and auditors and IRS commissioners, they're debating on what is ordinary, debating on what is necessary. But let's just use common sense. Of course, if you run a business, for example, you run a CPA firm, then you got a bunch of baby diapers coming out as a business deduction. That's not ordinary and necessary. I would assume all of you professional folks are out of the diaper age, so there should be diapers, right? So with that, and just giving you silly examples. I'm trying to impress you with these things so you don't think that we're just boring accountant. We're actually quite fun, right? And we use diapers to talk about ordinary and necessary. So diapers are not ordinary for business expense in a CPA firm, and also not necessary. And we can potty train people so they don't have to have diapers, right? It is important to separate business expenses from the following categories. Very, very true. The first one is cost of goods sold. You don't want to put cost of goods sold into your business expenses. Remember, in your income statement, you have sales, then cost of goods sold, then the rest of operating expenses, right? So we're talking about separating cost of goods sold from your operating expenses. Capital expenses. These are things that you bought equipment, purchased vehicle, all of these capital expenses, they're not expense. They're not business expense. They are capital expenses, they're asset, they're investment, so that need to be separated. Of course, you may say that, oh, Ying, you are wrong because I actually deduct capital expense. That's a whole other story. That's depreciation, bonus depreciation, Section 179. There's a whole bunch of stuff there, right? But we're just talking about these business expense that ordinary and necessary. They don't include cost of goods sold. They don't include capital expense. They certainly should not include personal expense, right? All right, so next one, current law. And it is really important to recognize we are in 2024. So the next tax season comes about, that in 2025 would be reporting things in 2024, right? So you want to know what happened in 2024, the meals and the entertainment, how would you handle that? Before 2018, this is before Trump's time, right? Before 2018, and well, not before Trump's time, but that's what Jobs Act come in, and he became president in 2016, then put through this Job Act. Before 2018, business can deduct 50% both meals and entertainment, as long as it's business related. Okay. After 2018, the Tax Cuts and the Job Act came out. That eliminated the deduction for most business-related entertainment. So what does that mean? It means you cannot deduct any part of the cost of taking clients out for a round of golf for the 18 holes, or to a football game. Example, you just can't. You cannot deduct. That's what the 2018 Job Act was talking about. And in response to COVID-19, of course, during these pandemic years, and the government actually allowed business to deduct 100% of their meal expense. Like if you ordered from restaurant and things like that, to help the economy to not go stale, right? So that's what the effort was, just special for that period. So our business owners might remember the time saying that, oh, really? I can deduct all the meals and all the meals in the year? Oh yeah, it's a COVID thing. Okay, good. So then they forgot about, now is 2024. It goes back to the Job Act. And you can still generally deduct 50% of the cost of food and beverages when they are business related or consumed during the business related entertainment. What am I saying here? And I love this term called word salad. Sometimes some words, you say that some sentence words you hear is like you didn't hear. That because it's a tasteless salad. But if you put dressings on there and make it spicy, suddenly these words make sense, right? So this right here, it makes sense because the entertainment is not deductible. But you can split the meals out from the entertainment and do the 50%. So what qualifies as a business meal? Here you go. IRS regulation clarifies that food and beverages are all related to items, whether they are characterized as meals, snacks, and etc. So they consider those are all meals. Okay, character is some kind of proteins that feed your stomach and make you have energy. How about that? Beverage, feed your stomach, make you have energy drink. And the food and beverage cost, including sales tax, delivery fees, and tips. This is very wise for IRS to put out that, because when we buy food, don't we have to pay sales tax? Don't we have to pay delivery fee if it is shipped into the office? And the tips, don't you have to give tips for the delivery boy? So, that's included. So your 50%, you can take that as a 50% as well. To be 50% deductible, the food and beverages consumed in the conjunction with entertainment activity must. Listen to this. If you're actually did a golf event and that golf itself is not deductible, but the 50% of food is, so you have to make sure that you purchase that food separately. So it says be purchased separately from the entertainment or be separately stated on a bill, invoice, or receipt that reflects the usual selling price of the food and the beverages. And you can deduct 50% of the approximate reasonable value if they're purchased together, right? So that's the guideline from IRS to still says that 50% meals deductible, but entertainment is not. Other rules, per IRS regulations, okay, this is a special word salad with spicy fish sauce. It's very hard. To me, English is my second language. This one, I really have to, taste the fish sauce to understand what it's all about. No 50% deduction for the cost of business meals is allowed unless, what it says? It says that you actually can deduct the 50%. You can deduct the cost of business meal 50%. 50%. That is allowed. Listen to this. Number one, the meal isn't lavish or extravagant under the circumstance. This is very loose definition. Lavish meal for someone who always eat McDonald's would means Outback Steakhouse, lavish. But for someone always eat in the country club and lavish probably means tomahawk beef steak, some $350 per ticket meal, right? But there's always things that a auditor from IRS or your CPAs would have a general sense of what is lavish or extravagant meal. So as long as it's not like that, 50% applies. And then the taxpayer or an employee is present at the meal. So that is important. Is present at the meal, that's 50% allows. The meal is provided to you or a business associate. Yeah, that is definitely a business meal, so 50% pass. Who are the business associates? They are the people with whom you reasonably expected to conduct businesses with, such as establishing, prospecting customer, clients, suppliers, partners, employees, all of that. IRS regulation makes it clear that you can deduct 50% of the cost of a business-related meals for yourself. For example, because you are working late at night and you spend $10, no, there's no $10 for dinner anymore. Are you kidding me? And to expect inflation with Trump economy, I say the reasonable meal from McDonald's should raise to $40. I'm just kidding. I don't know. We just go look and see, right? And this Saturday, I have a webinar coming up. The title of that webinar is Small Business Owners, How to Weather the Trump Economy. That is my seminar content. If you like it, please come on Saturday. I have done my homework. I have read what I can read, and I'll give you my 2 cents to my small business owners. You know, I am really all for you. I actually don't have the knowledge or that kind of experience to serve people like Elon Musk with his empires and how that works. But I have plenty of experience and has experienced plenty of situations to understand how to help small businesses. So I am a big asset for small business owners. You want to use this asset to go further and weather the Trump economy for the next 4 years. Traveling on business meals. Per IRS regulation, the general rule is that you can still deduct 50% of the cost of meal while traveling on business. The long-standing rule for sustainability of your expenses is the receipt. You must have it. That always applies. So you want to make sure that you got the receipt, then you can deduct the 50%. IRS regulation also reiterates the long-standing general rules that no deduction are allowed for meal expenses incurred for spouse, dependents, and other individuals. You know, secret the other person, right? The mistress that spouse allow you to bring. I'm just kidding. Those business travels, right? Only limited to business. But of course, if your spouse is part of your business, then of course they come in, you can deduct that portion. But generally what I is trying to say is that, you know, has to be necessary, has to be reasonable. So if your spouse and your kids are not part of business and it's just part of your life, sorry, and there is no deduction for being part of your life, only deductions for being part of the business. Makes sense, right? All right, 100% deduction in certain situations. Want to see that? Yes, here. 100%. We can deduct 100% of that meals to entertainment. Okay, so example would be food, beverages, and entertainment incurred for recreational, social, or similar activities that are primarily for the benefit of all employees. For example, holiday parties. For example, community CPA's annual meeting, right? For examples, something barbecue on the parking lot to entertain clients. And the food beverages, And entertainment available to general public is also deductible 100%. And this example would be that you provided a local, like local businesses and designate one day to come out, entertaining people, give food out and all of that. As long as it's publicly available, that is deductible. Food, beverage, and entertainment sold to customer for full value, of course, that's become your business expense, right? The amount that reported as taxable compensation to recipient employee and the meals and entertainment that are reported as taxable income to a non-employee recipient on 1099. What it says is that basically what IRS was saying is if you have an employee and you actually paid the employee for the meals and whatever expenses that employee had, you paid it out. For a business, that become your expenses, right? When that become your expenses, of course, you can deduct that out of your sales. Same thing if you pay to the 1099, which is a contractor, then that become your deduction. Again, as a business owner, as a small business owner, and when you are running your own business and you eat with customers and you meet with your employees, and this 50% is applies to. But between you and your contractor and you and your employee, and there's several rules here, so I want to touch that on this last slides I have for today. It's about meal and expenses for employee. So you can generally deduct only 50% of the cost furnished meal to your employee. That's a general rule. So for example, if your employee was going out business travel, the general rules is that the employee will come back with the receipt and then you reimburse your expenses. You're allowed, as a business, you're allowed to deduct 50% of that ticket from your sales. But you may be a good employer, you say, oh, I'm going to reimburse 100%. That just means what? Means that you pay your employee 100% is not a problem, but come to your own book, you cannot take the other 50%, right? But of course, you may now have a question, oh, what about my coffee bars downstairs in my office? What happened to coffee and snack that we provided to employee? Now, are you talking about 50% of a deductible? And the rules from IRS is called de minimis fringe benefit. Those are not subject to the 50. So you, of course, can just buy those supplies and as an office expense and deduct out of your profit, right? But sometimes you see the businesses are doing per diem meals, which means that if the employee goes on travel and you say that, okay, the breakfast I reimburse you $5, lunch $10, dinner $15. If you have these fixed things, while they were out of town, that can be deducted 100% because it's per diem meal. For employer, you can deduct that 100% because that's just what you do. But for your employee, to sustain that per diem meal, they also have to submit receipt. So I just want to explain that to you so you understand how that works. All right, so this concludes our meals entertainment. So if we just kind of come back to what we talked about, folks, there's no deduction for entertainment unless it is your Christmas party for the whole company, right? Kind of like that. And then, of course, everything else is 50%. So in your accounting book, employer, small business owners, in your accounting book, you, of course, booked all your meals, 100% because that's what you paid, right? But when you file your taxes, know that you can only take half of it. And also, one more recommendation for you. We would like you to separate the meal expense from entertainment. Don't even have them be a one line. It used to be one line, right, on the financial statement. Separate them out. You really should not have entertainment. You can still put in entertainment because you really did pay $2,000 to do a 18-hole golf outing with your very important clients, yes, maybe you did that. But you know that when you separate that into entertainment, your tax people come around would not deduct that for you. So you won't make a mistake, but at the same time, you have your book properly done, right? Again, I want you to know of our partners, and you can book our time online. We will come energetic and alive for you. And so you can ask all the questions you have. Really prepare your meeting with us, because I have some clients coming into the meeting, literally knock off so many questions they have. It's just well worth it. So you want to be prepared to come on to the meeting with us. And also, we provide tax planning services. And I want to tell you that our firm is very different. And even though tax planning services, we could just focus on what you do 2024 and give you the answer. But we actually equip ourselves with so much knowledge. And we're just a bunch of scholars here. And we learn what can happen, what is happening, what happened in the past, what is happening right now. And we also implement things for you to face the future, the short future. I always say that tax people are very realistic. We're not like financial planner. They're talking blue sky creameries kind of future. That's too far for me. I don't think beyond 2 years. So I'm just thinking of this year and 2025. And on Saturday, I have a webinar that's called Small Business Owners, How to Weather the Trump's Economy. And I want you to come to our webinar again at 3 p.m. on Saturday. I will be giving you all of my research results and give you practical advice as a small business owner, what you should do right now without delay, and knowing that what could happen into the short future. All right, ladies and gentlemen, appreciate you joining me at 3 p.m. on Tuesday, and Community CPA and www.communitycpa.com, that's our website. Then on YouTube channel, our channel name is Community CPA. Subscribe to our channel and be part of us. Grow your business regardless. And I always say that the president changes, the economy updates. This is the beauty of U.S., right? You're not handled by one party. The two parties are all trying to balance this world for us. So the Americans spoke, and here we have Trump in administration for another 4 years. And this is the time that we need to recognize what's coming and take advantage of everything that is available, made by Trump, to the billionaires. So treat yourself with a billionaire treatment. Isn't that nice? I love that. So I'll talk to you again on Saturday, and see you. Bye-bye.